Just a minute after 2, welcome to it. This is Market View, the Monday edition. After what a weekend it was, and it's going to be a very, very warm show for you, even though it is cold here in Babane. It is going to be very essential today on our guide to look into the latest in business and economic news. We want to unpack the stories that matter most to the Eswatini business landscape today. First up, we are going to look at the impact of the recent amendments to the Liquor Licensing Act, which is a move that is curbing illegal trading in rural communities. Then we want to discuss Eswatini's beverages' remarkable contribution of 260 million emalangeni in taxes last year and how responsible business practices are driving economic growth. We'll also explore the ongoing efforts to establish a sovereign wealth fund, which is a key policy initiative aimed at securing sustainable development for the nation. Later on our Enterprise Watch, I'll be speaking with economist Sanele Sibia, who's going to give us critical insights on the government's new policy statement and what it means for businesses locally. And finally, we're going to dive into today's market analysis with a close look at currency movements, commodity prices, as well as the stock market trends. Stay tuned. We've got a powerful lineup ahead of you. Let's start by looking at business news today. Our first story says government amended the Liquor Licensing Act last year, incorporating that anyone who wants to open a liquor establishment in rural and peri-urban areas should get consent from the King's Office. There has been no liquor license applications for trading in the communities received by the Ministry of Commerce, Industry and Trade. Now this, according to the Minister, Honorable Manqoba Khumalo, has played a huge role in protecting communities from irresponsible drinking, especially minors.
Speaking at the Royal Villas Eswatini during the Senate Portfolio Committee workshop on the Liquor Licensing Act and Trading Licenses Act Amendment of 2023, the minister says amending these laws has played a huge role in stopping people from trading illegally, especially in the communities. The minister further says because the amended Liquor Act allows for the involvement of the Inner Council, there is no way people can open illegal liquor establishments in the communities, especially close to schools, clinics and imiphakathi, amongst other areas where eMaswati raised concern.
Solo phaselo mthetho sekuthengene ngoba kusethe kushoyini i-application lesikole nesizathu esithile mawucela i-King's consent uqale bandla kancane phakathi bese beya e-King's Office kusengakafiki kithi so kuyasebenza ngiyathi ukuthi impunga in the last term bekukhona labatshela ukuthi kutawuvula kanti siyachaza ukuthi kutawuvala ngoba kutawufika njani kimi ediko kungakanhluli e-King's Office. So please be assured thina le lokutawufika kithi kuphela kulaba labantu laba bayobhulisa bavalane.
Senate President Lindiwe Dlamini has applauded the Ministry of Commerce, Industry and Trade for amending the Act.
While we support the industry growing, but we are cognizant of the social impact that it has on our people. I mean, we have seen how HIV and AIDS is on the rise. And of course, liquor consumption being one of the contributors, of course, well, it's lifestyle changes that are needed. But we are just appreciating to say, you know what, familiarizing the new senators so that, you know, they know what the minister is doing.
The Act also poses hefty fines for those who will continue to be found to have flouted the law, ranging from 10,000 emalangeni to 15,000 emalangeni. For Market View, Nelson Dlangamandla, Vuminkosi Nzinisa, Ezulwini.
The Eswatini beverages paid 260 million emalangeni in taxes last year. Now, the country director, Doreen Tomarabaya, said this when sharing what they are doing to ensure responsible sale and consumption of alcohol, whilst also contributing to the growth of the economy. This was during the Senate Portfolio Committee workshop on the Liquor Licensing Act and Trading Licensing Act Amendment of the year 2023. This was held at the Royal Villas Eswatini.
Our contribution to the tax is about 260 million. and just in general around employment. According to some of the research that was done by Oxford, and this research was done during COVID in 2019, in the whole beer industry, we contributed about 1.1% to employment. And then in some of the initiatives that we're running to ensure that we are running responsible programs and responsibility. The first one being around the responsible trading program, which was launched at the end of last year in conjunction with the Minister of Commerce. And we basically are ensuring that there is a compliance around the Liquor Act, ensuring that the liquor license is visibly displayed in all of the retail stores, ensuring that there's no sales to persons under the age of 18, and as well as ensuring that the operating hours is visibly displayed outside and that they are complying to those operating hours. So what we've done around that is we've also done a lot of audits, and we've managed to increase from the baseline of 10% before we started this program to about 50% compliance, and we're hoping to take that above 60% before the end of this year. The second initiative that we ran was around the Retail Academy, which we launched last week actually in Mbabane and Manzini. And the whole point of this academy is to upskill and empower our retailers with the right skills, the knowledge, to ensure that they are able to grow their businesses, and if they grow their businesses, everyone else grows. So this also contributes to the unemployment that we're also facing.
8 minutes after 2. Thank you for staying with us. We'll go for a net break. We connect with Sanelus B, our economist, after the break to look into how the government policy statement speaks to the development of our local businesses.
Be sure to catch Business Watch every Wednesday between 2 p.m. to 3 p.m, where we feature the latest updates on business news, market trends, and exclusive interviews with industry leaders, as well as insights on emerging small and medium enterprises in the commercial sector. Business Watch, your business leader.
sabatandi ukuthi njengalokhu
Sivile sive sitikhulumeni.
Welcome back. Consultations for the formulation of a law that will see the establishment of the Sovereign Wealth Fund that is meant to fund development economic growth are currently ongoing between the Ministry of Commerce and different stakeholders. This was shared by the Minister of Commerce, Industry and Trade, Honorable Manqoba Khumalo. He said this when asked how the policy statement delivered by the Prime Minister last week speaks to businesses. Let's hear it.
Last week, Thursday, in Parliament, the Prime Minister, His Excellency Russell Dlamini, tabled a policy statement where government looks to grow the economy in 22 key performing areas. The Minister of Commerce, Industry and Trade, Honorable Manqoba Khumalo, says businesses stand to benefit fully from this policy statement.
He spoke about an infrastructure plan that will be prioritized and accelerated in Eswatini. This is great for local businesses in the engineering and construction space because when we execute that particular agenda, it's going to be a huge opportunity for local businesses to take part and employ people and drive economic growth. We also see, the creation of the Sovereign Wealth Fund, and I can confirm to the nation that, that work is very much advanced. We're at a stage right now where working with Eswatini Investment Promotion Authority and the Ministry of Finance and other relevant structures, the draft regulation for the creation of the Sovereign Wealth Fund is being worked on, and there's been a consultant that has been engaged for this work. This will allow Eswatini to have its own financing model, because the biggest problem with this ambition that His Excellency laid down, which is an ambition that is tied to His Majesty's vision for this country to be world class, will be how do we fund this? How do we ensure that all the programs and the projects and the interventions that are contained therein will be executed, and without a funding model that sort of liberates the country to make investment decisions in an unconstrained fashion, such a dream will only remain a pipe dream. However, the creation of a sovereign wealth fund is central and pivotal to this particular ambition. So I have personally been working with the CEO of Eswatini Investment Promotion Authority to advance this particular imperative. The policy statement speaks largely, though, to a culture change, and that will be my last point. It speaks to the whole idea of Nkwe. Nkwe is not necessarily a strategy, but Nkwe is a culture change. It means we in government, we in cabinet have to lead from the front in terms of driving a culture of execution, doing things quickly, doing things now, doing things efficiently, and making sure that change in service delivery is felt, not only spoken about. And we in the Ministry of Commerce are working hard to speak to our civil servants. The PS has a weekly routine with his team where he is working with them to ensure that all deadlines are met, to ensure that all programs are on track, and to most importantly make sure we are focusing on the right programs and delivering against our commitments on time. And I think as a ministry, if we make that contribution to the whole agenda of Nkwe, our customers, which is the society, the citizens, will indeed experience that we are changing the culture of execution.
Business Eswatini has welcomed the policy. However, the Chief Executive Officer, Inathi Dlamini, has stated that the business sector should be allowed to lead, especially in private sector economic growth. For Market View, Nelson Dlangamandla, Vuminkosi Nzinisa, Ezulwini.
A very comprehensive report there by our esteemed journalist Nelson Dlangamandla, our business journalist Nelson Dlangamandla, with Honorable Manqoba Khumalo. Let's take a deep dive now into this initiative, the latest policy initiatives really that aim to reshape the country's business landscape. Well, the Kingdom of Eswatini recently released its policy statement 2024, setting forth a transformative agenda to boost the economy, attract foreign investment, as well as empower local businesses. And today, again, joined by our esteemed economist, Sanele Sibiya, to unpack how these policies align with the business community's goals, as well as what they mean for Eswatini's future development. Sanele, thank you so much for joining us this afternoon. Quite an ambitious statement that has been laid out by the Prime Minister. And of course, Honorable Manqoba has spoken to what they have since taken incumbent as the Ministry of Commerce, Industry and Trade, and what it emphasizes is boosting mega investments as well as creating a business-ready environment. I suppose the question for you then becomes, how does this focus speak to the business community from an economist perspective, particularly for those that are concerned with creating a more conducive climate for business operations?
Thank you, Mr. Nxumalo. Thank you for having me. Good afternoon to the viewer. So what we are seeing here, Mr. Nxumalo, is, I think for me, one of the key takeaway things is we are seeing a divergence from the policies that were being pushed by the previous administration in terms of private sector-led growth to now a state and enterprise-led growth type of environment, or a hybrid of the two environments. So that is one of the major and key striking issues. And then pertinent to it, in as much as it does provide quite a lot of opportunities for the private sector, I think right now what businesses are taking in and really just mulling over and really thinking over is, where is the money going to come from to fund all these ambitions? I mean, we are in a country where we are talking of, I think right now the sovereign debt should be actually be approaching around 43%. Last we checked around 36%. And I think recent statistics did show that if we take on a new loan, it's going to go around about 40%. So right now we are already walking into that constrained fiscal space. And what then business is asking is, how are we going to fund this? And it's quite interesting that, the minister just made notion of the point of the fact that government is actually looking at setting up a sovereign wealth fund. So I think right now what business is doing is business is really just trying to eat up the strategy, and it is ambitious, as it were, and it does present quite a number of opportunities for the private sector in terms of, we've spoken of mega cap investment. We've spoken of infrastructure investment. We've spoken quite a number of sectors in which the government wants to take lead and ensure that those things are being done. But caution to the wise here, Nomaro, is the fact that business is looking at this as an opportunity, but then it's also coming in with too much of government, which is one of the problems that we've been trying to stride roll back as a country. So if we have a strategy now that comes in with too much of a government, when we were seeking and we're trying to move towards private sector-led growth, probably in the last administration, and now we're seeing the resumption or the resurgence of government and government taking lead, which is fine and well. But what one would have expected to see is, what is the plan, and when is the turnaround, and when is the pull-out strategy? When does government really pull out to allow business to take over? Or does government only stay in the catalytic type of investments, the investments that would then spur the private sector to come into action? So I think for me, that's quite critical. We need to be able to sort that and be able to somehow rein that in to ensure that we do not find the government either stepping over the toes of the private sector, or the private sector stepping over the toes of the government. What we want to do is to be able to attain maximum investment impact without necessarily crowding out so much of the investment. So I think that's why I'd really like to caution Mr. Numalo to say, yes, the strategy does present a lot of opportunities for business. There are quite a number of spaces in which business can actually come in and take up those spaces. But then as well, government needs to come up with a clear strategy on where and how far government is going to go, and where should the private sector take leave, and what ought to happen going forward, and so that we do catalyze overall investments.
Absolutely. I mean, it speaks to quite the big ambition, because I believe even the Prime Minister mentioned it himself, that 12% is quite remarkable for an average economic growth rate over the next 5 years. That is, considering the amount of money that we have as a country right now. But he also speaks about the fact that it's going to be driven by industrialization and investments in key sectors like infrastructure, agriculture, as well as manufacturing. I would have loved to ask, how you think this target is realistic or not, but you sound very hopeful yourself, as well as to, how does the business sector view such an aggressive growth ambition. But I think the most important question is the MSME's support and innovation, how it speaks to that, if you will, because we did see the significant emphasis on supporting micro, small and medium enterprises through financial and non-financial assistance. Now, given that MSMEs are the backbone of our economy, how critical is this support, and perhaps what should MSMEs be doing to capitalize on these opportunities?
Thank you, Numaro. So what I when I looked into the strategy, I think that was the one thing that I particularly liked, the fact that we are going to, as a country, focus on unlocking the potential of SMMEs and ensure that they can participate in an equal footing as, the bigger enterprises. And we look at actually the potential of growing our SMME sector as a country. So that in itself, Mr. Nxumalo, I think for me that is quite important, and that is what the country needs going forward to ensure that we do grow, because it's where long-term growth lies, in the growth of our small and medium enterprises into much bigger companies that can take up quite a number of quite a huge chunk of the fallout from from when big companies leave. And so what we're looking at is the strategy seeks to integrate FDI together with SME growth, which is actually something more of a continuation of the investment policy which we are seeing there. And really just trying to come up with practical solutions in terms of how we are going to do how we are going to capacitate SMMEs. And I think that's the only section of the strategy that really does bring about a number of potential solutions into the problems, unlike being a high-level type of strategy. So I think that's where the Prime Minister and his government actually want to focus, where we really can reap a lot of benefits if we did focus into that, and if we did really invest and rationalize our expenditures to ensure that we are really just pushing the boundary towards unlocking the potential of SMMEs. And because with that we will come sustained growth when all is said and done. If SMEs can grow to a level where they can actually sustain growth and they can sustain jobs and they can sustain business in this economy, then we are likely going to see an economy that is going to grow and, be more resilient going forward into the future.
Absolutely. You know what? Thank you, Sanele. Your insights are really, really invaluable. We've heard the new policy sets an ambitious, transformative agenda for Eswatini's economy, but its success will depend on how well businesses as well as the government can collaborate. And I heard you quite frankly elaborating and emphasizing on that. You're not going anywhere. You'll join us once again just after this quick bumper as we get into our market analysis. All right, and for our deep dive into the performances of the indices of the day today, Sanele Sibia joins us once again virtually on what we want to do in deciphering Wall Street numbers today. Sanele, welcome back. Thank you so much for staying with us. An important day today when we look at the numbers. Quite a lot of, definitive incidents happened this weekend that could impact what has shaped the numbers today. Let's get into the U.S. markets first. Very, very important here what we are seeing. We are seeing that the Dow Jones Industrial Average is up by 0.72%, followed by the Nasdaq Composite, which is at 0.65%, S&P 500 at 0.54%. We are seeing steady gains today, Sanele. How do you see this performance impacting investor sentiment, or rather investor confidence, especially given the ongoing economic uncertainties?
Thank you, Mr. Nxumalo. So what we are seeing in terms of the markets and what we expect to see going forward, more especially into this week, is, we do expect markets to be a bit cautious, more especially in the US, as we edge closer to Wednesday and as we edge closer to Thursday and we get the decision on the interest rate cuts in the US. So what we are seeing right now, we know that small rally that we're seeing in terms of all the indices that we are tracking, you can see that rally is actually really being driven by, the tech sector specifically, just making gains. And, as we are getting closer to earnings season, so individuals are really looking into that. But when you look in terms of the data that came out, it's signaling a relatively weaker economy in the US. Weak in a strong region, but it does indicate that it's relatively weak, and people are, most analysts are now worried of whether the economy is going to go into recession or not. So this week I do expect a cautious entry into this week, and then going forward as we edge closer to the decision, we should probably see a bull run if we get, say if we get a 50 basis point cut, but I think now that's somehow on the picture, not necessarily on the picture because inflation increased by, it stayed a bit higher in this just a few just yesterday when we looked at it, and so now we do expect a 25% basis point rate cut, and once we are there, you might most likely see somewhat of a surge, but not the bull that would have actually the bull run that we have expected to see if we got the interest rate cut that would have just been sufficient to ensure that that credit uncertainty is taken out of the market, and there is a lot of money now flowing towards consumption and all of those things. So this week, that's what we should be expecting to see, a cautious entry into the week, and as we start that policy meeting, and then I think around Thursday or Wednesday when the numbers come out, then we should either see whether it's going to spell a bull run or the markets were so spooked in terms of what's it called in terms of the growth prospects of the economy. So this is the similar story. If you go to the European markets, we can see that London and Frankfurt are also on that cautious type of stance. They're on the red, with only France just gaining a bit of ground, purely because France is coming out from those political doldrums. So it's more of a normalization type of adjustment happening in France. But if you look at London, you're seeing that there is a bit of that calm, before the storm, that bit of a calm before the storm, before markets decide how they are going to move. Same thing will happening in Germany. Again, if we move on to Asia, you will see the same picture, relative calm before the storm. With investors really looking into whether they want to take in or not take in, the risk. So we are just waiting for those meetings to start in, because I think Europe is meeting this week, London is meeting this week, and same thing with the Federal Reserve Bank, and I think also Eswatini is meeting this week. So it's a very interest rate heavy type of week this time around, and that's what markets are really just trying to take a step back and watch what is going to happen along those lines. Then again, coming into South Africa, what we are seeing there in South Africa happening is, yes, we are also caught within that interest rate frenzy in South Africa, but there is that somewhat of a positive momentum, within Johannesburg, just trying to make some gains, and purely because if you look at our inflation figures, we see that inflation has actually let down from 4.2 to 4.1 in Eswatini just today. And also in South Africa, the same is expected to happen, and we do expect it to come back into the midpoint, at least, get to that 4.5 range, and of which point the Reserve Bank of South Africa will be more than flexible and more than happy to start cutting the rates. So we should be also expecting at least a 25 basis point cut in the interest rate in South Africa. And then in the domestic economy, you'll see that nothing has changed much. But when you look into commodities, you will see that commodities are also emblematic of the story, the fact that it's a very heavy interest rate environment week. You will see that with gold, it has actually reached an all-time high. It's now there in the 2,600 region. And what is now going to determine the adjustment in terms of the price of gold is actually going to be the amount by which the interest rates are cut within the Federal Reserve Bank. And what we're seeing in terms of oil, the oil is signaling the fact that there are prospects of that weaker demand across the globe. That weak demand component of the risk matrix seems to be overtaking, the overall geopolitical uncertainties. So right now, demand is the story to watch out for when it comes to oil, and that's what markets are also watching out for. And then in terms of the currencies, Mr. Nxumalo, you can see that the domestic currency has actually become a bit stronger across all major currencies, and that's purely due to the fact that, as the interest rates are going to begin to cut down in the US, we should expect to see a bit of a shift from bonds to equities. And once that shifts happen, we start seeing those forex portfolios realigning. I think that's why I need to put it to rest today, Mr. Nman.
Yeah, thank you so much, Sanile, for your insights. I'm afraid we have run out of time, but I think you've pretty much, given us a comprehensive overview of our indices today. You'll join us again tomorrow. But at this moment, I want to thank our viewers as well for staying with us on the program. This has been Market View, the Monday edition. It is the 16th of September. Enjoy the rest of your afternoon.